the trick to stepping outside of the urban is the takeout. And so if it gets a little too unique, it's not to say that we couldn't do it, but if the takeout is going to be the sale, and that's kind of the obvious story of what's happening, then, we could probably do it. But if we're going to be, lending on a property that alt lenders and A lenders are kind of not necessarily interested in, then I'm not sure that they're going to get the takeout they wanted. And that's not always something the client is thinking of up front, but it's something we're thinking about and educating the broker on to make sure that we don't have a client that's not only has a private, but stuck in a private. That's really not what anybody wants. So it's a view across the province. We don't shy away from any particular locations, but certainly want to make sure that the locations are ones that are reasonable for takeout.
Hey everyone, thanks for tuning into the Canadian Private Lenders Podcast, a show covering the private lending industry, the mortgage broker space, and the Canadian economy. Your hosts are Neal Andrino and Ryan and Neal. Enjoy.
All right, everybody, welcome back. It's episode 70 of the Canadian Private Lenders Podcast with your hosts, Ryan and Neal. Neal, how you making out, buddy?
Doing great. Everybody's home today. The roads are quiet because there's snow on the path, but I don't see any of it right now. It's a beautiful sunny day.
Not a flake has fallen yet, but the kids are coming out of school anyway. So it's one of those days in wintry Atlantic Canada.
100%.
We got a very special guest joining us today, Neal. This is going to be an exciting one. We're expanding our horizon to the Ontario market a little bit today. We've dabbled a little bit in the past, but I'd say this is probably the biggest MIC that we've had on yet. So today we're thrilled to welcome Derek Serra, president of Westboro Mortgage Investment Corporation. Prior to Westboro, Derek worked in senior roles for over 23 years as part of RBC's mortgage business. And Westboro MIC is an Ontario-based private lender dedicated to providing residential mortgages. Westboro's been in business for over 20 years and has funded over $1 billion in volume since 2021. Derek, welcome to the show.
Thanks, boys. Great to see you again. It was nice to see you in Montreal at MPC, and great to see you again today.
Absolutely. Great to see you as well. And we're excited to chat with you about your thoughts on the market and Westboro as well. Neal, you want to kick us off here?
Yeah, for sure. I think the first thing we'll say is to start is talking about your career prior to Westboro, because we'll be talking about that a lot moving forward. Maybe do you mind going over your career path a little bit, maybe even before RBC, how you got into that world, and then what kind of made you want to switch from RBC into Westboro, and then what that looked like?
Yeah, sure. I was in university and I got a part-time job at RBC as a teller. And, I wasn't necessarily at that point looking to make banking a career. But, we wound up getting all the licensing. That's one of the keys when people ask me a little bit about career advice that, if you're going to go into the mortgage industry or the investment industry, either one, you kind of have to have your licensing. And I think, that rings even more true now on the private side with the level 1 and the level 2. And, so I think that, once you start getting your licensing, you start to then define your career path. And so RBC was a great 23 years, continued to work through a variety of increasing roles. My last role was the vice president of mortgage specialists in GTA. And so I had worked shoulder to shoulder with a lot of the mortgage specialists at RBC across the country for a long time. I had been a sales manager prior and then a VP. And so, I had a really good kind of sense at that time of where brokers were at. And there was just a real sentiment at the bank that a lot of our big producers were going to be moving into the broker channel, just looking to have kind of an increased, tool belt, increased kind of opportunity to work with alt lenders and such. And so, that got me prompted thinking about, boy, if all these people are gone, what am I going to be leading here? And ultimately, was able to leave on a fond farewell. And from there landed at, it was called XMC at the time. And so there were a bunch of ex-RBC executives who kind of knew who I was and brought me over to XMC to launch what was at the time an A and alt lender. And, if you're looking to grow the A insured business in Canada, Toronto's not the spot to do it. Given, the property values are, at the time it was capped at $1 million. Now the cap's gone up a bit, but still, which brought me out to spending a bunch of time in Ottawa. And in Ottawa is where I came across a lot of great support from really big brokers who have become really close personal friends. And that's what brought me to Westboro. And, I got to know the group at Westboro, and they were transitioning from a family-run business, a very successful family-run business, to having sold to a capital corporation. And the capital corporation was looking for someone to come in and expand across the province, because at one point Westboro only lent in Eastern Ontario, being kind of Kingston and East. And so that was the opportunity for me to move over and become the president of Westboro and really bring Westboro across Ontario for lots of people to kind of get to know us. And, that included a whole bunch of things, right? Marketing, hiring. We needed more people and people who knew kind of the market across Ontario, not just Eastern Ontario. And next thing you know, 4 years have gone by.
That is quite the path. Quick question, just going back to RBC for a second, because I know we have some people that are listening that are in the banking industry and somewhere along that ladder. What would you attribute to your success and growth within RBC? Like, what would you think would be maybe one or two ways of operating or key attributes you're trying to focus on for someone who's looking at that, being like, I want to climb the ladder within these huge banks?
Yeah, I loved my time at RBC, and I do think that and I spent a long time, probably the last 10 years there, as what was called a regional vice president. And so that meant having at some times financial planning reporting to me, small business, retail, so branch network, and then specifically the mortgage side. And then ultimately, what would sometimes be stumbling blocks for people in their career is the accreditation. So, if you wanted to kind of go down the path of being a financial planner, at the time you needed to have what was called a PFP and designation. And, ultimately, if you're interviewing for the job and you've got all the right ingredients, but you don't have the accreditation, it makes it hard to kind of hire someone and put them into that training pool, assuming they're going to get the accreditation, because it becomes very awkward if you don't actually pass or you don't get the accreditation. And so, that's been my advice. I still get it, obviously not as much. I've been gone a long time, but once in a while people asking for career advice. And I always kind of say to them, pick the stream that you want to be in. If it's commercial banking, then, get into that small business piece, get all the training that you need to set yourself up to have a career in commercial banking. And you're likely going to have an MBA or some kind of commerce degree in that world. And so if you have to work on that along the way, do so. Because if you don't have all the accreditation and the education, it is going to limit you at some point. And then, ultimately, the other part of it is when you become senior enough and you have a big enough job, you're not necessarily going to have the time that you had in a more junior job to do the extra studying at night or what needs to be done. But the wonderful thing about working at a bank, and the wonderful thing about, a career that progresses through a bank, is the incredible amount of training that you get, whether it be focused on the client experience, on partnering, on, you can have many careers within the bank if you get all those different components. And you can learn a lot about a lot of things, which is wonderful. And that's really kind of the wonderful piece about working at a bank. Like, I was able to work in the financial planning component and in a small business component and in a retail banking and in a mortgage specialist world. Like, it gives you great breadth, because once you leave and you're working at some of these smaller companies or monoline lenders, there just isn't the scope, right? You don't have, a training department. You don't even have a training person. If you haven't learned it by now, it's going to be tough for you to figure it out. So I would say, if you're in a banking environment, certainly kind of use it to learn a lot about that environment, and also find people who have jobs that you want and befriend them. That's always something I did. Like, I wanted somebody's job and it was maybe 2 moves away, but I kind of started to try to get to know them. And, for the most part, I'd say that, especially at RBC, but I'm sure at the other banks, it's the same, that there's just a lot of nice people. And if you you put your career first and you're willing to do the work, they'll help you along the way.
Yeah, that makes sense. You make friends with them and then steal their job.
Yeah. No, I think that's great advice, Derek. And before we go deeper into Westboro, I just have one more follow up with RBC. Just want to get your opinion on this. So RBC is obviously a behemoth in the Canadian mortgage market. I think they're over 20% market share, number one market share in Canada. Why do you think they've never got into the broker channel?
Yeah, it's a great question. It's a question that gets asked regularly, and I think that with their acquisition of HSBC, it sparked a whole discussion that, not everyone has the insights I have, because I'd said there's no way they will use HSBC to dip their toe in the broker channel, but that was a whole kind of chatter in the broker space saying, "Oh, that's why they're doing it." And as far as I'm concerned, while I've been away for a long time, I would have said that RBC's acquisition of HSBC was mainly because they were one of the only ones who could afford to buy it. There was maybe only going to be RBC or TD who could do it, and RBC has been very focused on growing their private banking division with high net worth individuals. And that's something that HSBC has a lot of. And so I think that was the synergy that they looked to expand upon. Ultimately, it doesn't fit within the value proposition. I mean, RBC has an incredible brand right across the country, and clients kind of flock to RBC, and they know that. And so they can come across clients, whether it be through their online banking or their kind of call centers or the branch networks and their network of, mortgage specialists. And it just doesn't fit for them to expand into the broker channel. Mind you, the broker channel has really shifted dramatically over the next few years. And so, I think that at this point, I would imagine it's something that's on their roadmap. I don't know if it's something that they'll ever kind of officially jump into, because it would create a major change in their underwriting, their regulatory environment by adding non-staff to have access to their money. It's never happened before. And so, I do think that the big banks they'll lean more towards AI than they will towards the broker channel to see, how can they continue to use AI to go direct to consumer. And I think that the brokers will always have choice and relationship on their side. And that's going to be the battle between the two. And, I always think in our industry, relationship and choice will trump AI, because these are, big decisions that people have to make. But it could certainly kind of skim off that top 10%, or if that even exists anymore, of the super clean, easy peasy deals that may be able to just kind of go through a channel without advice. But for the most part, I'm seeing it go the other way, where people need more advice and they need more help and more direction. And I think that broker channel is going to continue to be the spot that the clients will look to. So,
couldn't agree more.
Everyone's situation is so unique.
Yeah, absolutely. Let's dive in more on the Westboro side, Derek. So obviously we talked about it off the hop, but Westboro's, highly recognizable name in the private lending space in Canada. Specifically, like you mentioned, you guys started in the Eastern Ontario region, the Ottawa region, $1 billion in fundings over the past 3 years. So can you kind of give us a bit about the background there and some of the key decisions that led you and Westboro to get to the point where you're at today?
yeah, sure. It starts with really sound ownership and commitment to grow. And, from there, you also need to have the capital. And so you need to, and I would encourage anyone who's looking at either investing in a MIC or even booking a mortgage at a MIC, like, you want to make sure that wherever you're doing business, they're well capitalized. And so, Westboro already had deep relationships with a syndicate of banks that allow us to use some of their money. And we also have a very strong, loyal investor base that was looking to support us in our map of growth. Mind you, those two things also come with it's not necessarily regulation, but you do need to lend based on what you said you're going to do, which makes it trickier than just kind of going out and doing business. Like, if you say to your banks and your investors that we're going to do this percentage of second mortgages, for example, then that's how many you can do. You can't do anymore, or you shouldn't be doing anymore, things like that. So it's not as easy as it sounds, but certainly when you've got all those pieces together, I'm glad we talked a little bit about the RBC piece, because that's partly where all this came from. A lot of the top brokers, not because I left, but after I left, a lot of others left as well and became, some of the top mortgage brokers in the country. And a lot of them were on my team. A lot of them were my good friends for the longest period. And they support us at Westboro. In addition to, another wonderful just group of brokers that were already dealing with Westboro, and some of them who knew me from my other lender days. And so you start to bring together the money and the brokers. And, I don't think we were planning on doing $1 billion in 3 years, but the market certainly has shifted to a focus on private lending, and the business is there to be done.
Yeah. I looked down for a second on my phone, Derek, and I apologize. Just everyone's freaking out with maybe it's snowing. It's not snowing yet, but all meetings are moving around like crazy. But I might have missed this, but I remember when we spoke at MPC in Montreal there, you had mentioned too how important having a good brand is and how important good marketing is in this space. I think partially gets competitive, and then even just to make your brokers feel confident, make your clients feel confident. I don't know if you want to touch on that a little bit, if you think that's still really relevant in growing a successful MIC at this point.
Yeah, it is. And for me, I mean, that's why I'm glad we started the conversation with my time at a bank, because, I would still say I'm a banker by trade. And the one thing you learn at the bank is that the client is very important. And I'm not sure that everyone thinks that way. And so there are some private lenders who, they think that the broker is really important, or the investor is really important, or that they are really important. Their revenue is really important. But if it's all, without the client in mind, I think it's very short-term thinking. So for example, if you've got a brand where you put together a product and at renewal, you're charging the client 6% or 5% renewal fees. And in some cases, you're not allowing them to cap the fee. And this comes as a surprise to them, and they're saying, holy smokes, like, what do I do now? So sure, you'll have done that one transaction, but the broker's likely going to lose that client. And you're going to wind up with a brand of one and done kind of things, which is fine. I mean, I don't want to judge what others are doing. They can do whatever they like. I'm sure that they can make money doing that, but I don't think you can scale to the degree that I wanted to scale, and our owners would want to scale Westboro on that path. I think you need to kind of be transparent with your fees, transparent with your experience. And then when you are, that becomes part of the brand, and that's what fits really nicely into the marketing, which is we do what we say we're going to do. And it's really designed to be true private lending, where clients can get in, clients can get out. The exit is as important to us as it is to the broker and the client. I think that's really an important path and a mindset that MICs should have if they want to scale.
Yeah, it's interesting. You mentioned how, a big part of the success is being well capitalized, and I think that really is really important in the space right now. Obviously, with growing market share for alternative lending, I was speaking to a broker who's Ontario based last night, and he was telling me how many privates, maybe not institutionalized privates or not MICs, but because they're not well capitalized, they'll only do loans at 50% loan to value, because they know, every loan's going to be $800,000 to $1 million, and they're going to run out of capital within 5 deals or 10 deals, right? So it's just very interesting how you can really set yourself apart when you've got that capital base, the secure capital base.
Well, and I mean, for me, ultimately, in my shtick to every broker who's listening is always, when you're brokering, the idea is that this is going to be your client for life. Like, the client's going to be in your CRM. You're going to get to know their dog's name. You're going to send them an email wishing them a happy birthday. And the lenders that you choose, including in the A and alt space, and definitely in the private space, become an extension of your brand, because no one is getting up as a client and saying, I really want to have a Westboro mortgage today. The broker network understands who we are. It's a whole different, like, you got to start putting Westboro on stadiums and at the Olympics for people to understand the brand, which is never going to happen. So the brokers can trust us, and they can then, have the clients trust us. But when you think back to what brokers are coached to say, this is how you're going to build your practice, this is going to how you're going to build your brand, and then you wind up sticking a client at like an unknown lender and at renewal because they're not well capitalized, and the client's made all 12 payments on their 1 year, the lender is saying, sorry, we want our money back. And all of a sudden now the client, instead of having a 50 or 60 or 70 basis point renewal fee, is faced with a 3% renewal fee because they've got to move. And now all of a sudden they've got to provide documentation. And in this environment, in the last 24 months, we have to now get a new appraisal. And if the appraisal, which it is, was lower than it was a year or 2 years ago on the term they were on, they may not even qualify in the private space to move. And all of a sudden now this broker who was hoping to have this client in their CRM for life and wishing them happy birthdays and happy birthday to your dog and can't wait to see you at my open house for all my clients. Now all of a sudden that client is not going to deal with that broker ever again, because it is the broker, not the lender, that introduced the client to this problem. And so my advice to all brokers is always be very careful with the lenders that you select and treat them as an extension of your personal brand, because that's who they are. And so you got to get to know them. And, just because you're getting emails from 8 or 10 or 12 privates a day, all privates are not created equal. And you want to make sure that you've got that client in your CRM, meaning that you're going to get in and you're going to get out and you're going to do what you hoped you could do with that client. So getting to know guys like you in the East and me in Ottawa is very helpful, because we'll be able to kind of do what we say we want to do with brokers and clients. And it's very important, because without it, I just, and ultimately, just to close that part of it, if we do 50, 60 deals a month, I'll tell you, the majority of them are not the broker that did the other transaction for the client. So the client is moving from broker to broker. And I think that kind of flies in the face of the advice and kind of the end-to-end experience a client should be having with brokers. And so picking the right lender, considering them as an extension of your brand, and making sure that they're good at what they do is important, especially in the private space.
Well said.
Yeah, that is it's valuable too for someone who's trying to grow a MIC. You need to really make a good effort to make sure the brokers trust you. And it won't take long. Within 18 months, if they start seeing you do that kind of operation, they're not going to send you another deal. So exactly, it's for both brokers and MICs for sure.
So, Derek, can we go a little deeper on specifics of what Westboro likes or doesn't like? So I know you started Eastern Ontario, you've expanded across Ontario. Do you have like a preferred lending area? Is it like urban only, or will you go to the rural areas in the Northern Ontario's? Can you kind of talk a little bit about that?
Sure. Yeah. And so ultimately, we have the flexibility to lend right across the province, including rural. And so that includes kind of, some properties with acreage. It includes cottage country. The trick to stepping outside of the urban is the takeout. And so if it gets a little too unique, it's not to say that we couldn't do it, but if the takeout is going to be the sale, and that's kind of the obvious story of what's happening, then, we could probably do it. But if we're going to be, lending on a property that alt lenders and A lenders are kind of not necessarily interested in, then I'm not sure that they're going to get the takeout they wanted. And that's not always something the client is thinking of up front, but it's something we're thinking about and educating the broker on to make sure that we don't have a client that's not only has a private, but stuck in a private. That's really not what anybody wants. So it's a view across the province. We don't shy away from any particular locations, but certainly want to make sure that the locations are ones that are reasonable for takeout.
Yeah, that's something we face constantly out here in Atlantic Canada. Having more challenging takeouts. We don't have as many urban areas out here. So outside of Halifax, the biggest urban areas are around 100,000 population, right? So many areas that we're lending in would be considered rural or mid-urban, I guess, maybe by A lenders. So that can be certainly challenging for us. Just to go a little further though, so are you guys exclusively short-term, everything 12 months or less? And a follow-up to that as well, I know you mentioned before we started recording that you guys also offer P&I payments rather than just interest only. Is it all P&I, or do you also offer interest only in certain scenarios as well?
Yeah, great questions. And so ultimately, again, like with the takeout in mind and with advice to the client in mind, what we like to see is principal and interest payments. We like to see 12, like if it's a 1 year, we can do a 2 year term as well. But, assuming the majority of it's 1-year term, we like to see principal and interest payments, because think of it this way: at the 9-month mark, when the broker is pulling the credit bureau and looking at the takeout, if they've got 9 months worth of bank statements that they can show on alternative lenders, say, here is the mortgage at Westboro and here are the payments the client is making, and from a cash flow perspective, they can afford this mortgage, that's going to help with takeout. It's not to say that there aren't certain situations where we won't cap the payments for clients on low loan to value, where the takeout is obviously the upcoming sale. And we can help with that, but those are very unique for me. And I'm always very careful to have deep conversations with the broker to make sure the client understands that the takeout needs to come from a cash flow perspective. And that's been very helpful, especially in this kind of decreasing property value environment, where maybe another lender to take us out is not going to be at 65. The loan value is going to be a little higher, and they're going to want to make sure that the client's affordability is intact. So P&I payments, 12-month terms, we can do interest only as well. In some cases, if it's investment property or the story, allows for it, we have that flexibility. Firsts, seconds, and certainly construction. Like Westboro has been known for construction for the last 20 years. And, we have had to shift a little bit in terms of our construction program to make sure that we can still offer it and it's still viable. So ultimately, without getting into all the details, we want the client to have a little skin in the game up front. So they need to buy the land. They need to be able to have a little extra money in case there's an overrun, which there almost always is. But, Westboro has funded well over $1 billion in construction mortgages, over the last 10 years. And we continue to do so. We run with 50, 60 million in our construction portfolio, even in the dead of winter, because there are projects that are now kind of, we'll see a big kind of shift in the spring where these properties will be done and the new properties will get started. But again, on the construction side, all I'd say is I would encourage any of the brokers listening who are considering construction to join us on our monthly webinars. We walk through the difference between private construction and bank construction. And, ultimately the major difference is flexibility and cost. We are more expensive than the bank, no doubt about it. But I'll tell you, we have incredibly high net worth clients. We did a mortgage for a client that's a judge, a dentist, like high net worth individuals who are just saying, you know what, I understand the cost to build my house and I don't want to be, hindered by draws that are kind of on a schedule. I just want this thing done. I want it done quickly. I'm willing to pay a little more. It's short-term money. And I'm happy to do it with Westboro. And so the construction has been one that we're very good at. And I think that's the other piece. Like if I go back to my days at the bank where we had, I probably had 360, 370 staff that reported to me at one point. None of them, maybe one or two of them, wanted to ever do construction because construction was such a gong show. And it just made it harder and harder for people, if you're not doing it on a regular, to know how to answer questions and how to shift along if there's problems. But, my underwriting crew all have pipelines of construction they're managing all day, every day. And so when you come in with a construction deal at Westboro, you're dealing with someone who's probably working on 8 or 10 of them as they're talking to you. So nothing's going to be a question that they don't have an answer to. Nothing's going to be, and I always laugh when other lenders will, they'll post on Facebook or whatever, hey, we're back doing construction. And it's like, what does that even mean? Like, where did your funding go? And are your staff ready to answer all the questions that brokers and clients might have? Because it's certainly much more complicated than just doing a regular mortgage.
Yeah. Judging by the demand I've seen on the private side for construction loans in the past 5-10 years, I don't think anything's changed at the bank since you left, Derek.
Yeah, I think so too. And I get it. I mean, it's not, I think for the most part, most lenders and banks are looking for things that can scale. Like we can just keep pushing through the system. And the construction mortgage is, by definition, a custom solution for each client, depending on what they're building and how far along they are and so on and so forth. And so, I think I was really lucky to have inherited a team that really understood construction. And, obviously we've amplified that across the province, but grateful to never have pulled it off the shelf. I would say that about all the products at Westboro, that, in my time here, we've always had all of them available. We don't kind of say, oh, we're not doing any seconds now. And all of a sudden, okay, seconds are back, and we're not doing construction. All of a sudden, construction's back. Because the worry that I would always have with lenders who are doing that, it's kind of like, well, where did they go? And what happens to all of the clients that are coming up for renewal? So if you're not doing construction anymore, and I booked a construction mortgage with you, does that mean now you're going to be more difficult to renew because you're trying to kind of liquidate that part of your portfolio? Always easier to just deal with the lenders who are really good at it and know how to do it, and acknowledge that it is going to be more expensive on the private side. But it's a cost of doing business, as it is all the rest of the build of the house.
Yeah. Derek, on that point, just quickly, what's like your main tranches of your clients? Like, what are your biggest bases? You said it sounds like around 10% is construction. Is there like 2 or 3 big pools that make up the base of your book?
Yeah, like the majority would be like residential single family.
Yeah,
And
fair.
then a little bit, like there's say 8 it fluctuates. So 8 to 10% seconds, 8 to 10% construction, mainly residential single family. Within that, there's rural that makes up maybe 10% of the 80%. But the majority of the portfolio is first mortgages, owner
Urban,
occupied,
single
urban.
family.
Yeah.
Yeah, got it.
Nice.
Okay.
Just before I want to talk about the investment side of your business as well, but just to wrap up on the broker side or mortgage side, I want to talk a bit about your broker partnerships. I know it's very important. You kind of touched on it already, but you guys have this unique product or perk that you have for your broker partners called your private members club. Can you kind of expand on this for us and talk about what this is and how that's led to potentially foster better broker relationships for Westboro?
How do we join the club?
Yeah. Well, actually you guys are in.
Oh, sweet.
You're in. Once you're friends, there's, it's that friends of ours, friends of mine, and friends of ours from that old. I think it's from Goodfellas, and so you're friends of friends of ours. Friends of ours is the made guys. But ultimately, it really kind of started with a vision of efficiencies, and I think that some of the A lenders do this at a much higher scale, because they're dealing with, hundreds of millions of dollars that are flying through the door. But the goal was really, there are a lot of brokers across the province, and a lot of these and there's a lot of mix across the province. And so what we're looking to do is to partner with very select brokers. And the ones who treat us well, we're going to treat them well. I think that's that at its core, that's what this is. And, on the A side and in the alt side, you don't necessarily have as much flexibility. Like in particular on the A side, the margins are so thin that you can only pay so much and you can only do so much, and it is what it is. When you step into the alt side, there's a bit more flexibility, and into the private side, there's an infinite amount of flexibility. And so just want to make sure that the brokers who are sending business to Westboro and funding the business they send, with respect in terms of the efficiencies that we're trying to manage, are well looked after. And so whether that means, supporting them at a function that they're having, or, paying them a bit more on certain deals, that's kind of the genesis behind Private Members Club. And, almost 50% of our business last year was funded by that small group of brokers. And it's interesting, some brokers will say brokering is, I took a deal and I sent it to 6 MICs and I got 6 commitments back, and now I'm going to present the best commitment to my client. And I would say to that broker, please never send another deal to Westboro, because that's not brokering. That's why all of us pay BDMs, we pay inside sales folks, we pay to have websites and information. And I mean, I'm always available on a phone call as well to answer any questions you might have, to give you pricing that might make sense. But once you've submitted the file, like assuming that the documentation you have makes sense and the appraisal comes in, we want you to submit to fund. We don't want you to submit to then get a commitment and shop it around. The shopping should be done in advance. And the Private Members Club brokers get that. And they're big producers, and they're big producers with other lenders as well. So they treat us all as partners. And, I think that partnership runs deep. And I'd say the biggest compliment you can have in a PMC member is when they become an investor at Westboro as well. So if you have a broker and they're going to invest their money here, that just tells you the confidence they have in the partnership, that they're willing to kind of trust you with their, whether it be their RSP or their investment. And I think that that's where it comes full circle, that they're really kind of in it for the long run, in it with the client's best interest at heart, and in it with the efficiencies in mind. Because, for you guys and for me, we want to treat every deal that comes in as a priority. But if once you've issued the commitment, you don't hear back from the broker for days or weeks, or they're not returning emails or phone calls, how can we treat the next one they send in with as a priority? We don't work for free, right? Like we have to take the deals, and you also have to have, I think, an engaged staff. And it certainly doesn't make an underwriter feel good, regardless of what lender they work at. If they're getting deals in from the same broker, and the broker, with no intention to fund. So I think that was the thought of Private Members Club, and I would say it's worked really well for us, up to this point.
Nice, cool. Yeah, for sure. So now going and switching gears to the investment side of things, Westboro has kind of averaged around a 6 to 7% yield over the past few years. Recently, it's clicking up closer to 9, even high 9s. What was kind of the catalyst for this taking place? Was it the rising rates, demand, different products? What's kind of caused that growth in yield?
Yeah, predominantly. I mean, I would say the increasing interest rate environment meant that we had to increase our cost, and I think that there's certainly that when you get into some of the more expensive products, like construction being a good example, that's what can, on average, kind of shift the yield up a bit. But we're certainly not looking to take on, like, we wouldn't start doing more construction or more seconds to try to push the yield or return. We would be bound by our, like what we talked about earlier, this is the way the portfolio needs to be set up, with this many seconds, this many construction. And if that means that the yield's going to come down a bit, then that's fine. But ultimately, I think that it was the increase in interest rates that allowed us and others to kind of grow the return to investors. And we're hoping to be able to maintain somewhere around where we're at now throughout 2025.
Nice. Who makes up like kind of the pool of investors you find? You find it's a lot of individuals, corporations, small business people. Where do you see a lot of that advisory capital?
It's a little bit of all. Yeah.
Okay.
Yeah. I mean, we have just over 300 million in capital today. We raised something like 136 million last year.
Wow.
And it was a great year for us in capital raise.
Yeah.
And it's a variety. It's a lot of self-employed individuals, some broker nation, and some bigger kind of investment funds who are allocating a percentage of their fund to Westboro to represent part of their fixed income solution. And so, it's been a real pleasure to be trusted by so many kind of people. They have a lot of choices on their investment side that they can pick, but ultimately, the mortgage business is one where I have so many people who will say to me, kind of in my personal life, like, "Oh, I'm going to do this now. I'm going to start lending out my own money." And I look at them and I smile, and I just kind of think, you own a restaurant, like maybe just run your restaurant. Or you're a real estate agent, like be a real estate agent, because what we do is not easy. And the difference in obviously working with a MIC like mine or yours is that, we have multiple mortgages within our MIC. Whereas if you have $1 million and you're going to give it to one client, and that one client gets hit by lightning, that $1 million, while you'll probably get it back because you would have done it at a lower loan to value, it could be tied up for a very long time. And so if you've got MICs like yours or mine, where they're, they're focused on doing good things, and you want to dabble in the real estate market, this is, I think, a very kind of good way to do it, to be able to invest in a fund that has 1,100 mortgages versus, giving one to one person and hoping that it comes back in the time that you hoped.
100%.
Just curious, Derek, you mentioned, some brokers who are investors as well. In Ontario, so if a broker was to invest with Westboro MIC and then they wanted to do a deal with Westboro MIC, is there additional disclosure that has to happen there? I'm just curious if you know.
No, I mean, when I say investor, I mean that we're talking about, like, it's not a significant amount, right? Like, let's just say some of them would have a couple of $100,000 invested. Right. And so, a couple of $100,000 out of 500 million is not
Yeah.
It's not going to be a material amount. I would say if they were a bigger investor, then certainly that might be something that could become something from a disclosure perspective. But most of them have, some funds through their RSPs or their corporations that they've got at Westboro. And ultimately it makes them private members club as well, like in the sense that it's our
Gotta
bigger
get in the club.
brokers that generally have done it. And so I would say that, they, but it doesn't change. Like if the deal's not a fit, the deal's not a fit. And if they don't like it and they want to take their money out, then, I think as you've gotten to know me now, like nothing's going to take me off the focus that we have for Westboro, not any one broker, not any one client, not any one investor. And so, we have to stay true to what we've been doing, and that's got to be the priority.
Makes sense.
Which is always difficult. Like you guys will come across that as you're growing. Like you'll have different times in your growth trajectory opening a MIC where you might have someone who says, I want to give you a lot of money, but I only want to have it for a short time. And, you probably have to say no. Or like we talked about before we were recording, they might have a huge deal that they want to do. And you might say, you know what, I'd love to have the growth at this time, but it doesn't fit within our value proposition. And you have to just have faith that there's other deals and other brokers and other opportunities there, and stick to your guns in terms of what you committed to do as a MIC. And I think that the MICs that have faltered in the last few years, they dipped their toe in unfamiliar ponds, whether they did kind of big land deals or they got a little over there. They did some construction, but they wound up doing too much construction. And in those cases, they certainly got themselves in a little bit of hot water.
You can't break from your principles. When you establish what you're going to do and what you have to stick to that. It's like any business, really. Yeah, they're getting exactly head over the skis and overdoing it.
Derek, we noticed that Westbro was in the news recently with your past CEO, I guess, Nick Christopoulos, recently departing the business. So just kind of curious if you could expand on that a little bit. Obviously, you guys have had a really strong couple of years, and just curious, was this kind of planned or was this unexpected? And do you foresee changes coming to the management team there?
Yeah, you know what, Nick brought me on, and so I'm forever grateful for our time. And Nick's not gone anywhere. He's still on the board.
Okay.
And he's still an owner of the company. It's actually our capital corporation is Velos, and so he's still very much involved in that regard. He just took a step back from the day-to-day operations.
Okay.
That's kind of what that announcement was, but ultimately, still very much a key kind of person and a board member, and certainly his advice for what we're doing and what we'll do in the future will always be kind of consistent. And so not a lot of change there.
Very cool. Very cool. Thanks. Did you want to go here before we start wrapping up?
Yeah, for sure. So now we're getting ready to wrap up a little bit, but just curious what your thoughts are on the current lending landscape. I mean, specific to Ontario, then maybe if you want to touch on even just the broader market, I'd be curious as well. But it's been obviously crazy. We had a huge rate rise, then we've now had a bunch of rate drops, maybe I think for some of us more than we maybe anticipated, at least in the period of time that it happened. And then obviously we're seeing what's going on south of the border. I guess maybe, touch on what's going on now and where you kind of see things going moving forward.
Yeah, I tell you, like for those, a lot of people I think got into the business, and the business really took off, in 2020, 2021, like through COVID, and we saw property values increasing. Like I remember, some brokers, I think they were joking, but I don't know if they were joking when they were saying, Derek, just do the deal. By the time it closes, and by the time it comes up for renewal, the property will be worth 10% more than it is now. And so do it at 80, the property is going to be worth, look at this, look at this development, look at that development. And they weren't wrong. Like the properties were going up in value. There was interest in cottage country and rental but I've lived through the cycles before, and for everyone who's going to live through this cycle, they're probably, you guys are not there yet, but your beards are going to start looking a little more like this as you've lived through one of these cycles, because in a decreasing interest rate environment and in an environment where property values are not as consistently on the uptick, it creates a lot of ruckus. And so, and then in particular, I think that the condo market in and of itself, separate from this, was one that if you look at the past 15 years, anybody who bought a condo pre-construction bought it And by the time it closed, they were up 20-25%. Like it's very hard to argue with anyone who made, contributed to their net worth by flipping the construction condos until 3 years ago, when people maybe decided, I'm going to buy 2 of them or 3 of them because I'm going to flip them. And now all of a sudden, when they're coming on market, we're seeing that the appraisals are coming in much lower than the purchase price. And most people will have never seen that happen before, and certainly didn't expect it. And so I think that, ultimately 2025 is going to be, I'm hoping that property values have hit their low, and we've hit the bottom, and we're going to start to see a modest increase on the way up. I do really think it is geographic specific. And when I say geographic, I don't mean Ontario. I don't even mean Toronto. I mean, you need to know the pockets of where you lend, because there are parts in Toronto where I don't care what's happening in the economy. If a house on a particular street comes for sale and it's in one of the really good markets, it's going to sell. If you live in some of the good condo buildings, like in the west end of the city, when the units come for sale, they sell, because they didn't necessarily go up tremendously. They didn't go down tremendously, and they're good kind of places to live. They have access to the streetcar and public transit and otherwise. And so I think as a lender, we're really going to have to be knowledgeable of where we're lending, because I do think certain parts of the market will course correct quicker than others. But I think it's going to be a slower comeback than people would like. And I certainly think that the lag in value will be predicated on the lag in appraised values. So when we're looking at appraisals now, like the appraisals ideally have comparables over the last 90 days, and many of them don't have comparables. They have to start stretching to the last 4 months, the last 5 months, which really makes the value now even more questionable, because we can't necessarily nail it down on a comparable basis with an appraisal. So I do think that we need to see, speaking on a snow day like we're having today, we need to see the snow gone. We need to see the spring kick in. We need to see the spring market come out and the realtors come out with listings, which I think is going to, for the first time, set in place where the actual values of properties are. And then that market movement will start to trade values. It may not necessarily increase values, but we'll start to have better line of sight on comparables, which will give us better line of sight on, are we actually at the bottom, or have we started to see it increase? I think interest rates will be our friend. So we will start, I don't think we're going to see them go up. And so I think if anything, we're going to see relief on interest rates, which will help. But I'm just not sure the regulatory environment is going to make it. There's no way any government that comes in, whether it be here or south of the border, is going to, spur on the kind of inflationary times we had before. So they'll let interest rates come down, but they'll watch very carefully. And some of those kind of equity programs that the banks once had, or self-employed programs, or TDS and GDS exception programs, I don't think we'll see them come back. And so it'll be cheaper, but still difficult, I think, to qualify for financing.
I was going to ask you kind of what you alluded to by the ruckus, but I think you kind of covered it there, just with rates are continuing to come down. Prices have kind of continued to come down, but I think you're saying you're going to expect some stability, hopefully, in this spring, summer market when properties come back online. Rates are at an affordable level, where there's a lot of new people that are looking to move in. Out of curiosity, so like Ontario, Toronto has been a bit of a downward slide for the last couple of years. It sounds like. Have you seen deflation across the board on any other prices? Like, and I say, I guess, in sense of like, when you go to a restaurant, have you like noticed a price difference? And the reason I ask is, like, locally, I know for us in the last 3 years, it's like double. Like, it feels like literally double. Like, you could go out for lunch for $40-$50 3 years ago, and now it's like $80 to go, $100. Where is that? Is that just sat flat, or has there been any sort of deflation, or what that look like?
Yeah, no, it's everything is ridiculously expensive, and in the city in particular, like I just, and having lived through COVID, like, and I live right downtown Toronto, and so, pre-COVID, like going to a Leafs game or going to a Raptors game, like the the traffic was there, and walking through the underground, like you were, shoulder to shoulder with people. And that was just city living. Like if you've ever come to Toronto, you've seen it. If you've ever been to New York or any other big city, you saw it.
Yeah.
And then during COVID, it was like, you can't believe that people haven't come back to the city. And it took a very long time to get there. And so I think that ultimately, I've really only seen in the last few months, like having gone to a Leafs game a couple of weeks ago, where the city seems to be back and all
Okay.
of the people are back. And I think that that's contributing to the government and other major employers saying that they're going to be back 3 or 4 days a week or more in the city. And as you're bringing people back, it's going to bring, obviously more customers back. And with more customers, I think that
Upward
potentially
pressure.
we could see people starting to compete for business again and pricing align. But it's just so expensive, and these tariffs. I mean, I'm not smart enough to comment on exactly what's happening with all the political pressures with the South and whatnot, but these tariffs aren't going to help. And then ultimately with, it's expensive to have staff, it's expensive to have product, it's the rents downtown, even though through COVID, there was a lot of buildings that were vacant. The rents are still astronomical for many of the small business owners. And so they have to be able to charge, these costs. And,
Yep.
I think tying it back to private lending, there will be long-term impacts from COVID. Like just because COVID's done, doesn't mean that it hasn't impacted the balance sheets of small business owners and families for a long, long time. There was a time not long ago where some business owners were saying, I either feed my family or pay my property taxes. Which one's it going to be? And so my property taxes are behind. They don't just get caught up in 1 year. And so I think, as lenders, we have to be knowledgeable and understanding of this major thing that happened in the world economy, and in particular in Canada. And I don't know what the future is. I know I went out for a drink the other night and it was $27 for a martini. And I just about fell off my chair when I got the bill, and I was like, it's vodka and
Crazy.
I don't know, maybe it
Yeah.
was really good.
They're really
olive
expensive
juice,
olives
but
now.
Yeah,
Yeah.
that's what I was saying. Like maybe I ordered the wrong olive. I don't know, but yeah.
Interesting. Okay. Yeah. I was just curious to see what your take would be, because I feel like I'm starting to hear differing opinions from people of pricing on every front coming down a little bit. And then there's a lot of people leaning towards the idea that we might have some upward pressure where rates are back down. And it seems like the summer might stir up a good push for the Canadian economy. But to your point, there's so many factors right now. And if you're not on X every 30 seconds keeping up with the tweets, you don't know what's going on.
Yeah, absolutely.
Just one more, Derek, before we hit you with a bonus question here, but just want to know, what do you love most about the mortgage industry?
Oh, it's the people. 100%. It's the people. It's what brought me from banking to the alt side. And it's what's kept me happy for the past, 8 or 10 years outside of the banking world, like seeing all of the great people, brokering and being able to offer their clients such great, variety of solutions, where at the banks, they were really kind of limited to one product and one solution. And there's just so much fun. I mean, these brokers, everybody works hard and plays hard. And it's just been so much fun. And what other industry would you get to know people from across the country and build rapport with them and be able to connect and have things in common and have a platform where we can kind of stay connected and have things, in common. And so it's the people for sure. And when you're dealing with, especially the best brokers, they are the best for a reason, and they're just machines at what they do. And they have incredible CRM, incredible client experience. And to be on that journey with them, helping them help their clients it's such a treat. And so, easy answer there.
Yeah. Great answer. All right. Bonus question. I'm going to give you two options for this one. So the bonus question is usually either in relation to pizza or the Maple Leafs. And I heard you mention the Maple Leafs either. Do you have a preference one way or another? Neil's shaking his head because he's a Sens fan, but I'm a diehard Leafs fan. So which direction do you want to go?
Well, I've been saying they should trade Matthews for 3 years. And so maybe we go.
Okay, I don't know if I want to go down.
Maybe
Okay, so
we go
let's
pizza.
Let's do it. Let's do it. I'm an eternal optimist, but also become a pessimist after being a Leafs fan for nearly 40 years here. But They've looked pretty good this year. They've been floating around top of the division, but it's always a different story come playoff time. But let's go crystal ball and say, things go the right way this year, and they make it to the Stanley Cup Finals for the first time in 50 however many years it's been.
Hallucinating.
Who's gonna score the winning goal to win the Stanley Cup and bring the cup back home to Toronto?
Wow. So I got to be careful. So two things, because I spend so much time in Ottawa. I'm as much an Ottawa Sens fan as I am a Leafs fan.
Oh, wow.
And if
Nice.
if I'm posting on social media and I'm at a Sens game or a Leafs game, I got to be careful, because if I do go Sens go, the Leafs guys are on me. And if I go go Leafs go, the Sens guys are like, you can't be both. But I work with a longtime BDM, Darren Campbell, and Darren is as much he's the ultimate Bills and Leafs fan. So he's got the scars, especially just recently. It's a sensitive topic to talk about football with them, but I got to go with Mitch Marner for the goal.
Nice.
And I got to say, I'm glad you're an internal optimist, because the funny thing about the Leafs that it ties back to what we do, that, you cannot, the goal is not to get past the first round. And after the first round in the playoffs this year, there were 31 more days left of hockey. And so if you've got your captain who's, tired and sick in the first round, the goal is not to win the first round. Do they have the longevity? Do they have the discipline to play another 31 days of hockey? Because, everyone's so excited to think, hey, they got past the first round. I mean, when you look at those teams that won in the end, and the scars, and they're banged up in their knees, and their teeth are missing, and they're bloody. I just don't know if your Matthews of the world have got that grit in him. I hope he does. He certainly has the talent. He's just never been afforded the opportunity to show the grit. But it's going to be the grit that keeps the top private lenders around for the years to come. And there'll be you guys in the East and us in Ontario. And it's going to be that same grit that's going to win the Stanley Cup.
Love it. Tied it all together. We could even see a Sens and Leafs playoff round this year. The Sens have been pretty good, so
that'd be epic.
The energy in the Sens, the energy in the stadium's unreal, and they're going to move that stadium in the next few years to closer to downtown Ottawa.
That'd be awesome.
I think that combination of where the team's going, the new ownership and the new stadium, is just going to make the Ottawa Senators a force at a really good time for their franchise.
Yeah.
So it's going to be good.
Bring back the old days.
Absolutely.
Yeah.
Funny you mentioned Darren Campbell as well. So I didn't realize he was a Leafs fan. I've only met him a couple times, but I believe he's an East Coaster. Is he not originally?
Is. Yeah.
Nova
He was
Scotia,
just out there. His mom still lives out there, and so he gets out there once in a while. And Darren's known for four really good things. Darren's known for being an East Coaster, Bills fan, Leafs fan, and scratch golfer. And everybody loves him for all four of those reasons.
So I'd say I'd tie in on three of those four. Definitely not a scratch golfer, but tell Darren I said hello, and I would love to connect with him again soon.
I will. Thanks for your time today, guys. This has been a real pleasure and a lot of fun.
Thanks, Derek.
Thanks so much, Derek.
Okay,
appreciate it.
care.
Really appreciate you.
Thanks everybody for listening.
Thanks for listening, guys. It's Neal, your co-host and co-founder at Keystone Mortgage Investment Corp and Director of Investor Relations. I'm also a real estate agent, real estate investor, and business owner.
And your co-host and co-founder of Keystone Mortgage Investment Corporation, Ryan McNeil. Keystone MIC is licensed under the Mortgage Regulations Act of Nova Scotia, license number 3000844, and through FCMB, license 89280. Keep in mind, the views of this podcast are for informational purposes only and are not financial advice.